Hi, today I'd like to talk about making over 100 pips in a single day. And I also teach you how to do these trades, how to apply these trades to your trading system in the Learn Forex Trading in 30 Days ebook. So when you first start off in the first week, the schedule for what you're going to do each day, each week is all laid out for you. So you start off slow, you get to know the trading systems, the indicators that are behind it, and then you work your way up. So by the end of 30 days, you'll be doing exactly what I'm about to show you today. But I'm going to show you the three that we mainly focused on today: the breakout technique, the scalping techniques, how to identify tops and bottom patterns, three pushes to a high. All of those strategies, all those techniques are outlined in detail in the ebook Learn Forex Trading in 30 Days. So you're going to learn how to do all of these techniques I'm about to show you. So we're going to start off with the easiest method first. First of all, it's got a small stop. It's really simple. The indicator is really simple. What to do is really simple. What we're basically doing is identifying the start of each new day. Now this is done on a 30-minute chart. That's why the HL stands for the high and the low. HL30. 30 is the 30-minute time frame. So we're going to apply this to a 30-minute chart. If you try it with another time frame, and if you use different indicators, please keep in mind that you're probably going to get different results. So we're going to start off with the euro. The euro's up. This is where we're going to start with the brand new day. We're going to start off with the easiest trading technique to use first, which is the scalping technique. This is the euro dollar. This is a 30-minute chart. This line right here, this vertical line, marks off the start of a new day. Once we have defined all of the price action in the previous day, so at one point our charts look something like this at the beginning of the day. So here is yesterday's price action. Today, by the way, is March 15th. It's Thursday, 2012. So here is all of yesterday's price action. So we can see when the start of the new day to the end of the previous day, we've got the high, we've got the low. So we would take, for example, a resistance line in here, something like this. So now we have our high and our low marked off for the previous day. And then we wait. So you set your alarms right at the low and the high for the day. Wait for price to approach either the support or resistance level. Once price approaches the support level, we need to identify what that level is. The previous day's low was 1.3010. All right. Now that low went as low as 1.33. 03 was the spike low. So once we get down to support, price cannot move lower more than 10 pips, but if it falls just short of hitting it, it still has to come within that 10 pip range. So if it, let's say it went as low as the actual low is 10, it would have to come to, let's say, 13. If it went as low as 13 and then bounced, that still qualifies. Price has to appear or approach the support level within 10 pips. And once we see that 10 pip range complete and hold, then we've got step one of our checklist in confirming whether or not this is an actual HL30 trade. Now we need an indicator. So we use one indicator for this scalping method. We don't want to complicate it. We use this method just with the CCI indicator only. If you want to get the same results, at least to start off with until you understand the strategy, the structure of this trade, I would recommend just doing exactly what I'm doing. Otherwise you're going to get different results. And now we have the CCI indicator, and we can see where the CCI reading is on the spike low of the previous day. And the CCI reads minus 168.86. Now, what we need is a closed, completed candle pattern here after the spike low that approaches the 10 pip range of the previous day support. Here's our candle pattern right there. Here's our entry on the close of that candle. And the entry is when you get that reversal candle pattern. Now the candle patterns are all covered in great detail, exactly which ones we use, because there are different candle patterns for this technique. They're in the Learn the Forex in 30 Days ebook. Now when that candle pattern closes and completes, the CCI reading has to be higher than that spike low CCI reading of the previous day. And the close of that candle is 1.3016, or we'll call it 17. It's 16.9. We're just looking for 20 to 25 pips. I would recommend going with 20. It's possible that it could hit 25, but this pattern will repeat. You always look for 20 pips. And when it reaches 20 pips on your charts, close the trade. if we're looking at using this particular technique, the HL30 on the pound yen and the euro yen, on those two, I'm looking at 40 pips from the close of that candle. It's different. They move a different distance than the average currency pairs that we trade, the euro dollar and the pound dollar. So if we get in at 17, we're looking for 37 as our target. And we'll take it out a couple of more candles. And right there is your spike high to 37. That goes as high as 38.5. That's where you close your trade. Now, we did this exact same method, this HL30, on the euro dollar. We traded it on the Australian dollar, right down here. It did the same thing, and it fell within that 10 pip range. We entered in on the proper candle pattern, and we traded it on the dollar Canadian, which was in the opposite direction. Here's your previous day's high. Here's right where we entered in, and we took 20 pips off the trade here. Now, by the way, all of the checklists for confirming whether or not you have a valid trade are in the ebook course, Learn Forex Trading in 30 Days. All of them are there. All the checklists are there, so you can follow exactly step by step how to confirm each one of these trades. So we picked up 20 pips here on the euro dollar, 20 pips on the Australian dollar, and 20 pips on the dollar Canadian. Now, afterwards, as we continue to trade the rest of the day, we also have the breakout strategy. We have to switch the entire chart to a 1 hour chart now to confirm the breakout technique. The breakout technique, this strategy, this same strategy works on the 1 hour chart, the daily chart, the 4 hour chart, and I teach you how to trade this technique as well in the ebook course, Learn Forex Trading in 30 Days. It's all there explaining exactly which indicators we use. Now we're just going to show the CCI indicator for this example. I don't want to get into too much detail because we're limited on time with this video, but I want to briefly show you the breakout technique and how you could make more than 100 pips in a single day. I'm not saying that you can do this every day because the markets don't work like this every day. Price doesn't move around and create these opportunities like this every day. Now, I put a resistance level right here, but you also see a couple of different things that are confirming here. Not only was it an HL30 that we were able to trade during the Asian session here and pick up 20 points, but this was what started this entire move from a technical perspective here on the chart. So we follow it along. We see that we have the potential for a W bottom pattern. Now you learn W bottom patterns and how to identify tops. That's all laid out for you in the ebook course, Learn Forex Trading in 30 Days. This exact same pattern that you're about to see is exactly what I review, and I explain to you in detail how to find profit targets using Fibonacci extensions. And then here is our breakout signal candle right here. It's strong, but it's there, and it's confirmed with the CCI indicator. Now we use two other indicators for this technique. You'll learn about that in the ebook course, Learn Forex Trading in 30 Days. We have a 3 pip entry. The high of that signal candle right there is 1.3056. We'll call it 57. So our entry, 3 pip entry, is 1.3060. Now when we trade this technique, this breakout technique, on the 1 hour chart, remember it's different for the 4 hour or the daily chart. We're looking for a 55 pip target. We get in at 60, we're looking for a profit target, a take profit target of 1.3115. Now you'll notice that we never got stopped out. Price moves up, and on this spike high of this last candle went as high as 18. There's your target. These trades work over and over and over again. They're patterns that continue to repeat. Now if we made 20 pips using the HL30 after the rollover during the Asian session on this pair, and then we traded it for another 55 pips, then we're making approximately 70 to 75 pips. But we did the same thing on the Australian dollar. Now I'll switch this to a 1 hour chart, and you'll notice the same pattern again. Here's that W bottom again, right in here, and here is our signal candle. Here's our entry, and here's our take profit, another 55 pips. So we earned 20 again by trading the HL30 here, and 55 again. Just between those two, the euro dollar and the Australian dollar, that's about 130 to 140 depending on your spread. Thanks for watching, and I hope you got a lot of value out of this video today. I really look forward to making these videos for you. I think that it's really important that you see the possibilities. I teach you how to take these trades, and you can do these yourself. They're safe, they're affordable. All the techniques are at least a 1-to-1 reward to risk ratio. All right, thank you very much. I hope you had a really good trading day.